Hello there. Welcome to Costs and Management Accounting N6, still on the paper on June 2023. So this is now question 3 on that question paper. This question is on contract costing. So we are going to go through the question and then we answer what is required. So I'm going to read the question. The question reads, the following information was extracted from the records of TNS contractors on 31 March 2020 regarding contract Charlestown School. The business uses the percentage of completion method to determine profits. So very important to take note of the method that is being used here to determine profits. Is being emphasized is percentage of completion. So that is what we have there. And then we are given a table. We are given a table there of balances that we have there. And if you go through the table, starting from there where we have got the contract price, which is 8 million, and we've got figures that are given there down the table. And then under the table, we have got a note that is there and reads only 75% of the profit or loss must be shown in the income statement. The remainder must be treated as provision for latent defects. So very important again to take note of this point. These are points that you have to take note before you attempt the question, because they are going to lead you to the solution required. Right? If you look at this note, it's saying 75% of the profit and loss must be shown in the income statement. So what it means, after completing this account, we are going to have a balance. So the balance that we are going to have, we are not going to write it as a balance sheet in a normal T account that we know. That balance, you're going to calculate 75% of that balance. If you've got a deficit on the debit side, let's say the credit side is greater than the debit side, so the difference is going to be the deficit on the. If it's on the debit, it means we're going to say 75% of that deficit, and obviously that's the 75% that is going to be transferred to the profit or loss. And remember, if it's on the debit, we are going to debit the contract account, then we credit the profit and loss. And whenever we credit the profit and loss, it's a profit. We know that in the profit and loss, profits will go to the credit side, and losses will go to the debit side. So if the deficit is on the credit side of the contract account, it means you're going to enter on the credit side of the contract account, and then the corresponding entry, we are going to debit in the profit and loss as a loss. So we are going to see what we have in our question. So on the required part, the first part is saying prepare the contract account for Charleston Town in the general ledger of TNS contractors. So we've got a T account that we've prepared here in terms of contract of Charleston School. So this is the account that we are going to enter the figures that we are having there. So in this account, we know that this side represents the debit side, and this side represents the credit side. Remember, this is a ledger account. And then what we are going to enter in this contract account on the debit side are the expenses or the costs that are going to be incurred. We are going to enter them on the debit. And anything that is going to reduce that cost, we are going to enter it on the credit side. And remember, I said after we have entered all the figures, we are going to have a balance. If you've got a deficit on the debit, here we're going to transfer it. We are going to transfer it to the profit and loss. And then if it's on the credit, we do the same. So that's what we have. So we go to the figures that we have in the question to try to find out what figures do we have there. So you start from the beginning where we have that table. At the beginning there, we are given the contract price is 8 million. We are not going to enter it in the T account. We go to the next one. Remember, we are looking for those costs. And then second one is material issued, which is 500,000. So these materials that were issued, they were supposed to be used. And when materials are used, they come as costs. So we are going to enter the material used on the debit side, the material issued on the debit side. And then if we have anything that is going to reduce this amount of material issued, we will enter it on the credit side. So we go to our T account. We go to our T account. And if you come to our T account, that means we are going to go to the debit side, and we are going to say material issued. Material issued. And we see that the material issued, the amount that we have there was, we have got 500,000. Then we go back again, check the next account that we have. Right, we've got wages paid again. Wages is a cost again. So we are going to enter it again on the debit side. So here we have wages. The amount for wages is 450,000. Then we go to the next one. We have got overheads. Overheads also, they are cost 200,000. So we are going to enter them again on the debit side. So here we have overheads. And the figure for overheads is 200,000. I'll go again to check what we have after overheads. Right. If we go there, we check the amount that we have there for after overheads. After that, we've got also subcontractors fees. Remember, these are also costs. So we're going to enter them again on the debit side, the subcontractors fees. So here we come here, we've got subcontractors fees. Subcontractors fees. And we've got an amount of 100,000. Right. Then we check again all the figures that we have there. After subcontractors, we've got material retained to suppliers. Remember, materials, we enter them on the debit as a cost. So this material retained, it means they were not used, but they were retained. So it means we are going to enter them on the credit side. Remember, I said anything that is going to reduce this cost, we enter it on the credit side. So the amount is 10,000. So we go to the credit side. We go to the credit side of that account. And then this is material retained. And it is an amount of 10,000. And we go again, check what we have next. Then after that, material retained to suppliers, we also have material transferred to another contract. So it means this material also was not used. So it's going to reduce again the material that we entered on the debit side. So we're going to enter it on the credit side as material transferred. So we go there and we go to the credit side and to say material transferred, and then the amount that we have is 40,000. Then we check again the next that we have after material transferred, we've got machinery. Machinery on 1 February 2019. Remember, this is a non-current asset. Machinery is a non-current asset, and we know that the cost or the expense that is associated with the non-current asset is depreciation, and the depreciation on its own is the loss of value of a non-current asset or a fixed asset. So we are concerned with the loss of value of this machinery. Remember, so this figure that we are given here, 400,000 here, represents the value or the value of the machinery at the beginning of the period. And we have got also machinery here, 31 March 2020, which is at the end of the period, which is 355,000. So we are seeing that the value has decreased. So this decrease in the value is, we can call it depreciation, and depreciation becomes a cost which you need also to indicate in this contract account. So we are just going to we are going to input the 400,000 and input the 355,000 in such a way that we are left with the depreciation amount. So if you calculate this depreciation that is here, we are going to have 400,000 minus 355,000. So if you do that, you are going to get 45,000. So here we can treat this depreciation in two ways. We can enter the machinery value that we have at the beginning of the year on the debit side, 400,000. Then we enter this at the end of the year, which is 355,000 on the credit side. then obviously we are going to be left with a balance of 45,000 on the debit side as our depreciation. Or we don't enter these amounts, 400 and 355. That's another option. You just enter 45,000 as a depreciation cost on the debit side. So here we are just going to use the first option. That is, we enter the amount of depreciation. The amount of the value of the non-current asset, which is machinery at the beginning, 400,000 on the debit side. Then we are going to enter also that one at the end on the credit side. So if you come here, if you come on our answer section, we are going to input our machinery here, the value of machinery, and we are just going to put the date of that value, which is 0102. If you check the date there, 2019. That is what the value of that machinery at the beginning of the year, of the period. Then you get 400,000 here. Then machinery value at the end, now you put it on the credit side, which is machinery, and it's at 3103 2020. And then the figure that we are given there is 355,000. Then we go back to check what we have. Right. After the value of machinery at the beginning, we've also material on hand, 20,000. Remember, we said this is material issued, 500. So out of the material issued, there were some material which were retained. So we entered on the credit as a reduction. And then we also have material transferred to another contract, 40,000, we entered on the credit as a reduction. And this on hand also means that this is material that was not used by the end of the period. So it was not used, so we cannot say it is a cost. So the material that was not used, also we are supposed to subtract it. We enter it on the credit side now. So we go again on the credit, and we are going to say material on hand. So the material on hand that we have is 20,000. Then we go and check again. Remember, also we have got figures for certified and uncertified work. These two figures, the certified work represents completed work, and then uncertified work is uncompleted work. So all these figures, we are supposed to put them on the credit side. So we are going to put 2,900,000 on the credit side. So we go there again. We have certified work. Our certified work is 2 million. 2 million. And then we've got uncertified work, which is 900,000. Right. So this is the information that we have according to the table that we have. You can go back to check. So the information that we are left with, cash received, which is 1,500,000, and extras 800,000. So these amounts, we don't enter them in this contract account. So with that, we can go down to the additional information that we are given there. We are told that only 75% of the profit or loss must be shown in the income statement. Only 75% of the profit or loss must be shown in the income statement. The remainder must be treated as provision for latent defects. So it means the balance that we are going to get, we calculate 75% of that balance, and then we transfer it to the profit and loss, and then the remainder of that balance, we are going to treat it as a provision for latent defects. So if you come here, we are going to add the total for the credit side, and then we enter, and then we add also the total of the credit, debit total, and then credit total. Then we compare. Then where we've got a smaller figure, that's where we are going to have the balance, that we are going to have the calculation of that 75%. add the total for the debit side there. You're going to add from 500,000, you add 450,000, you add 200,000, 800,000, and then add 400,000. You are going to get 1 million. Here on the credit side, you are going to get 1,650,000. That is the total for the debit side. Then for the credit side, you are going to get 10,000 plus 40,000 plus 355,000 plus 20,000 plus this is 2 million plus 2 million plus 900,000. You are supposed to get 3 million. Here you are supposed to get 3 million 325,000. So it means we have got a greater side of the credit side. So the balance is on the debit. So we are going to have our profit and loss here and our provision for latent defect on the debit side. So we are going to have our provision for latent defects here. And then also we are going to have our profit and loss balance that is being transferred. And we are being told that it's 75%. So what is going to happen here is that we now want to find the difference that we have, the difference. So we are going to say this 3 million, we say this 3,325,000, which is the greater side, then we subtract 1,650,000. So if you make that calculation, let's try to see what you get there. For 3,325,000, and then you subtract 1,650,000, and you get 1,675,000. 1,675,000. So here get 1,675,000. So this is the balance that we have in its own debit. But then we are told that 75% of the profit and loss must be shown in the income statement. So if you come here, we are now applying this explanation that we have here. Here now we are told that only 75% of the profit and loss must be shown in the income statement. So we are going to say 75% of the balance. That's the one that is going to be on the that is the amount that is going to be transferred to the profit and loss. So we are just going to say 75%, which is this one multiplied by 0.75. So if you multiply that one, we are going to get 1,256,250. So that's the amount that you are going to put on the debit side. So if you come here, come here now on profits, the figure that is going to the profit and loss is 1,256,250. And then the difference now is going to be the provision for latent defects. So if you come here now, you now make a subtraction. We are now saying 1 million. This 1,675,000. Then you subtract the one that is going to the profit and loss, is 1,256,250. You are going to get 418. Then you get 418,750. This is now the provision for latent defects. So we come here now and enter that one is provision for latent defects. It is 418,000. 418,750. So that is what we have here. And then obviously the totals, we are going to put some double lines there, and then we put the totals that we have for the debit and credit. Right. So remember the total that we got there was 3 million the total of the bigger side, which are 3,325,000, and then we have got 3,325,000. So that is what we have on the first part of that question. Then we go to the next question. Let's try to see what we have in the question paper. Right. We also have 3.2, and 3.2 is saying Siaya Construction. Siaya Construction started building a bridge in 2018. The following information was extracted from their records on 30 June 2020. So this is the information that we have. And then if you go down on the required part, it's saying calculate the percentage completion using the following formula. So the formula that we are given, that we are going to use there, where the formula is saying cost to date over total contract cost. So what we need to know is can we find the cost to date now? How can we find total the cost to date and the total contract cost, right? So to find the cost to date, we are just going to add the figures that we are given there for the cost from earliest period to the latest period. So we have got 2018 year is 800,000. So we are going to add this one, 800,000, then we add 1,900,000, then we add 2,500,000. That's the figure that we have for the cost to debt. Then for the total contract cost, to find the figure for total contract costs, let's say a formula that we can use there to find that figure. The figure is total contract cost. So we are going to say total contract cost. So it is equal to cost to debt. Cost to debt. So the figure that we would find for cost to debt there, then we add we're supposed to add estimated future cost. Estimated future cost. So what we are going to do for the numerator, remember we said we are going to add those three. So we are going to say our 800,000. Then we add 800,000. With 800,000 here, and then we add 1,900,000. And then we also add 2,500,000. Then this is going to be our numerator. Then our denominator, remember, we are saying total cost to date plus estimated future cost. So if you add these ones, we are going to get 5 million. 5 million. If you add those ones, we are going to get 5,200,000. 5,200,000. This is cost to date. The numerator said it's cost to date, and then we added these ones 3, and then if we add them, we get 5,200,000. So for the denominator, we're taking that figure for cost to date, and then we add estimated future costs. So the estimated future costs, we can check in the question here. Estimated future cost is given here is 2,700,000. So that's the figure that we have for estimated future cost. So here we have got 2,700,000. 2,700,000. So here now, what we are saying here, we are saying we add this the figure that we have for the numerator, you get 5,200,000. Then if you say 5,200,000 plus 2,700,000 to get the total contract cost, you are supposed to get 7,900,000. And remember, this is a percentage, so we are supposed to present it as a percentage multiplied by 100 over 1. So here we are multiplying by 100 over 1. Right, so if you calculate that one, you are going to get 66%. So this is the percentage that we have there. So that is our answer on that question. Then we move on to the next question. Let's see what we have next. Right, the next question is saying calculate the total estimated profit on the contract. Calculate the total estimated profit on the contract. Right, to get the total estimated profit on the contract, let's try to bring again the formula that we used there to find the total estimated profit on the contract. We are saying total. Let's try to create some space here. Right. To get the estimated profit that we want, we are going to say total contract price. We are going to say total contract price. Let's see here what we have. So we are going to say total contract price. Total contract price. Then we subtract total contract cost. So this is the estimated profit. So this is the formula for estimated profit. But this total contract price, so the total contract price, then we find it again by saying contract price plus any extras that you are given in the question. Remember, some questions do not give you the figure for extras. If it's not there, you can just take the figure for contract price. But if you have some extras, you add the extras to get the total contract price. So if you go to our question now, let's check there what we have. We're just going to substitute the figures there. Right, we go back to the figures that we have there. So you're going to see that we have our contract price here, which is 15 million. And then we've got also extras. So for total contract price, we're going to say 15 million plus 1,500,000. And then we get our total contract price. Then we subtract the total contract cost. And the figure for total contract cost, we have it, we calculated there, and it was 7,900,000. 7,900,000. Remember, this is the figure for total contract cost, 7,900,000. That's the one that we are going to subtract. So if you come here, we're just going to summarize that working. So we are going to say total contract price. Remember, we have the contract price, which is 15 million. Then we add the extras that we have, which is 1,500,000. So this one, the total that we get here, then we subtract the figure for total contract cost and 7,900,000. So if you do that, then now we get, if you calculate correctly there, we are supposed to get 8,600,000. 8,600,000. So that is what we have in terms of estimated profit. So this is going to be our estimated profit. So that's what we have to. So we look at the last question that we have there. Last question. That is on question 3. The last question is saying calculate the profit for the year using the formula, and the formula is saying percentage completed over estimated profit. Remember, these figures we already have them. The percentage completed, we calculated it as 66%. Estimated profit is the one that we've just calculated there. Then you also multiply by certified work over contract price. Certified work over contract price, and contract price, we said we added the figure for extras. And we are going to get, let's just check maybe the figure for contract price there. Here we said 15 million times 1,500,000. So if we add the two, we are going to get 16 million here. If you add these two, you are going to get 116,500,000. So that's the figure for total contract price that we are going to use there in that formula. So if you come there, other figures we have them. So you're going to say percentage completed. Remember, I calculated each and it was 66%. So you're going to say 66%. Basically, 66% is 0.66 as a decimal, and then you multiply by estimated profit. The figure for estimated profit is the one that you calculated there is 8,600,000. And then we are going to multiply by the figure for certified work. Figure for certified work, you can check it there in the list of balance that we have there. If you come here, figure for certified work is 11,500,000. So 11,500,000. So that's the figure that we are going to put for certified work. So it's 11,500,000. And remember, it's over the contract price, and the contract price is the one that we got as we added 15 million plus 1,500,000 to get 16,500,000. So if you calculate it as it is, so this one is over 1. If you calculate it as it is, you are supposed to get 3,956,000. So that is what we have in terms of profit for the year. Remember, here we are calculating profits for the year. So maybe this one is profit. So this is what we had, guys, in terms of question 3 that was on June 2023. So stay tuned for more videos as we prepare for exams. Those who haven't subscribed, please subscribe and share. With that, we meet again in and out.